Sam, for having us. Izzy, you crushed it. This is a beautiful segue into this panel. So just a little bit of background on me. I run a team called Strategic Opportunities, which is really focusing on exploring protocol services. An important part and parcel of that, of course, is an exploration of infrastructure, and specifically staking validation infrastructure, because we represent an institution and we only deliver solutions to institutions. We're ECP only. And so this is exceedingly relevant to us as well, because we're trying to find ways to engage with the technology ourselves and then also deliver services to our institutional client base. But I'm joined by a bunch of folks here who represent different elements, different companies attaching at different layers within the staking ecosystem. And so maybe just quickly to open things up, I'd love for you guys to introduce yourselves and where you work, and then what the core competency or the focus is of your institutions, and then we can sort of talk about the state of affairs in Asia.
Hello. Okay, this works. Hi all, I'm Lila Garcia. I'm Global Head of Customer Success at Ledger Enterprise. At Ledger Enterprise, we're focused on bringing security at scale to institutions, so exchanges, custodians, hedge funds, banks, crypto service payment providers, you name it.
Hey everyone, I'm Andrew. I represent APAC for a company called Blockdaemon. We're the largest institutional player in the blockchain infrastructure space. We do three things: blockchain access, nodes, APIs, staking for institutions, and we've got some MPC security software as well. Just to give you some context, we're well over 100,000 nodes under management across 60 other protocols. We do a ton of staking. We largely we're at the bottom of the stack. We support, we have a partnership with Ledger. We work with Galaxy. We provide validator nodes for Lido. But yeah, we very much sit at the back. Yeah.
And then Izzy, of course, you guys know Izzy now. So maybe we begin with just the landscape, because I think it's important to understand a little bit more about, as Andrew was just saying, like where folks sit within the stack, and then, who are your competitors, who are your peers, just to give a sense of landscaping, and then we can talk a little bit more about applications here in Asia versus abroad. But first and foremost, maybe as you want to kick us off. So liquid staking, you gave us a little bit of a glimpse of what it is, but what are some of your competitors? What does that whole ecosystem look like?
Mm-hmm. So liquid staking runs the gamut in terms of the markets that it plays on, basically. To a certain extent, we are very end-user facing, like Andrew was saying earlier, so like Blockdaemon are node operators that are at the bottom of the stack, and then liquid staking can be a coordination layer or a delegation layer at the top of the stack. But to a certain extent, of course, there's like a little bit of competition in terms of trying to attract direct stake, right? An institutional provider or a custodian might be looking to directly stake assets either via an LST or an LSP, or directly via node operators' institutional staking program. And then apart from that, there are also channel partners that direct stake, and perhaps maybe you'd like to say a little bit more about that.
Sure. So Ledger Enterprise, we provide the infrastructure and security layer that allow our clients to operate. So unlike some of, I would say, our competitors in this space, there are custodians, there's regulated custodians, there's custody providers. We provide self-custody for our clients, which is a bit different than some of the other people in the space. So I imagine most of you out there have a Ledger Nano or some sort of Ledger wallet, and on the enterprise side, we offer what's hardware, firmware, and software, and a layer of governance rules for our end clients to scale with security. So our goal is to work with partners such as Lido and Blockdaemon to then give access to the greater ecosystem when it comes to crypto and what you can do from the Ledger Enterprise platform.
And then from a Blockdaemon perspective, we're a B2B, but we're actually a very low customer count. So for example, if somebody comes to us, let's say family office or something, says, hey, I want 2 validators, we're going to be like, go over here, because it's just not the way we operate. Like at the moment, for example, we provide an API to Ledger and Lido, and as a wholesaler, so they can just order 500 ETH validators at a go with one single gas fee, right? And we keep thousands of them just sitting there idle for folks like this. So whilst, and we like to be able to support a bit of the infrastructure for everybody. So our customers, our larger customers are like Exchange, very large crypto native, very large digital native. There's a very well-known fintech in Europe that's doing staking. That all goes to us, and more institutions as well. But what we're finding is they want a solution that, hey, I want some traditional staking, I want some liquid staking, I want to do that with my custody partner. So we're actually seeing that institutions are, taking allocations where it makes sense. Yeah.
Great segue. Hold on to the mic. This is a good one. It's a softball. So, okay, we're talking about crypto native exchanges, and the institutions are now, knocking at the door saying, hey, we want to explore this as well. Maybe you can walk us through, how does the conversation differ with your existing, relationships and then these new institutions? And really what I'm driving at is, what does institutional specifications look like? How does that inform product design, implementation, that kind of stuff? Because really this is around barriers to entry. They're just arriving, but how are you managing those conversations and relationships?
Yeah, great. So let me give you a couple of perspectives. Let's take like crypto native, right? So they can move fast, they're very savvy. Like the engagement will be very much on merit-based, speed, quick testing, and generally moves very quickly through the motions. More and more though, we're getting traditional institutions going, I want to do this. And for me, it's back to the old school. I'm back in Cisco, and now we're back into hey, like a business unit is interested, they want to do it, they've got some people testing, and then they point finance, procurement, legal at me, and then we go through, where is the nexus of my staking capability, and all these sorts of legal questions that are very interesting, but there goes 4 to 5 months. So what we're seeing though is like that change is happening, right? But very much, we've kind of segmented out, we know who those folks are, and and that cycle and how that will work. We know how crypto native will operate, and that's really going to be merit. How good is the API? Let me check it. Let me kick the tires. But more and more, we're getting into very detailed legal, contractual frameworks with institutions around staking as well. And then, there's a whole education bit that needs to happen. I think you summed it up really well. There's no real analog here. So if you're in the room with a traditional finance person, they're trying to land it on something, and they kind of land on borrowing and lending, and you're like, no, that's not right. So I think we're getting better at it. It's still a slow process, but I would say all the ones we've worked through that have gone through the pain, and it's education in their company, have all landed and are all moving. We've spent, I won't say which company, we spent a lot of time in Japan, and Japan is very detail orientated. So you can imagine trying to explain some of this stuff. But yeah, happy to say once you're through, and they really can start to permeate the education through the institution, which we think is super valuable.
Perfect. I'd love to hear the Ledger perspective on this too. So thinking about bridging the gap between, I'm a very happy Nano user as well. So how does it change from using the USB sticks to something that's enterprise grade? What does that look like? What are the extra bells and whistles that you have to add? The assurances, thinking about risk, especially with a bearer asset. If you could just walk us through a little bit about those discussions, and then how to integrate into also providing staking services and what that that whole ecosystem looks like.
Sure. So just to give some context as well on the retail side, we've launched staking through Ledger Live, which I'm sure many of you guys are already doing. We have over 600 million staked on Ethereum through Ledger Live right now. On the institutional side, we have, in the billions of Ethereum that we're storing for our clients and assets under security, and the adoption there is much, much slower. And I say that because it's important to differentiate the retail market and the institutional market. The institutional market is where the big money is, but it's moving in a different pattern. than the retail market. And that's mainly because the institutions that we're working with, whether they're crypto native and can move faster, or they're custodians or not crypto native that are moving a little bit more slowly or cautiously, there are barriers to entry because they're looking for advanced reporting, API capabilities, functionality that they're looking for from their staking providers as well, not just from Ledger Enterprise, but making sure that there's slashing insurance and there's SLAs, and they have a full legal framework that can allow them to enter securely, knowing that their clients' funds are going to be secure. So from a Ledger Enterprise standpoint, we also work on education and trying to educate our clients on what it means to stake. It's not just earning rewards, although the rewards can be quite nice, but it is giving back to the blockchain itself and giving back to the protocol itself. So you have to believe in the protocol, and a lot of people see these high fees and think, oh yeah, that's money to be made, but the actual action of staking is much more than just the rewards that you see on the back end. So there is the educational piece, and then there's the integration piece, and then come the API and the reporting and lots of sexy pieces. But once we can deliver all of that with our preferred partners, then I think we see the ramp up goes fairly quickly.
Excellent, makes a ton of sense. And then maybe Izzy, just to complete the loop here, to me, as you said before, this is neutral technology, right? This is innovation, and if we're moving to that next level to say, well, you're just core staking now, there's this concept called liquid staking. I feel like education is that much more important. So you mentioned it briefly a few minutes ago, but how do you think about addressing the institutional base, driving that education, but also making them aware of not only the purpose and the promise of the technology, but also being, I think, very transparent about the inherent risks involved in, extending into direct on-chain activity?
Yeah, that's a really good question. So it builds on what Andrew kind of mentioned earlier, right? That the institutions kind of have or a lot of traditional players have a very traditional approach, almost like a corporate policy kind of way of approaching things, right? Somebody's interested in doing something, procurement gets involved, and you have like vendor due diligence that takes 6 months. Look, I know because I used to build and audit these processes before I joined crypto. And those things definitely have a use, but what we're trying to do is use the open nature of the things that happen on chain, the fact that this is all distributed code, the fact that this is essentially all like a collective effort underpinned by the actual activities that we're talking about here, like i.e. validating, to provide this additional level of comfort that used to come from extensive, detailed exercises where you would essentially do like semi-audits of things as opposed to unveiling the things that already exist and are like in the public eye but are being framed in the correct way. So one of the things that we're trying to do is understand how do you take things like ISO 27001, SOC 2s, and all of that kind of stuff, and translate the precepts of what they're trying to do, i.e. identifying risks, identifying what the risk mitigant effects are, what are the controls, what's the residual risk, and how is that dealt with, and framing it in the context of on-chain activities, collective efforts between node operators and liquid staking protocols, and how the application of a liquid staking protocol itself, in terms of bringing these actors together, actually does something very, very similar, but in a way that's up until this moment not clearly understood. And so it's 99% education, I think, and then there is also a little bit of taking the example of the people that have already been comfortable with this, using that up as a persuasive argument to try to change some minds, and then also find like a third path. And the third path might be, for example, utilizing custodians, right, that want to take or are willing to take up this additional due diligence work and using that as a proxy instead of everybody doing this work on themselves, or of kind of doing like a user journey or a transition in terms of moving from the older way of doing things to a slightly different way of doing things, but also availing ourselves of tools that exist on blockchains now that didn't used to exist. So a part of the reason for such stringent compliance requirements is because the traditional financial system is actually really opaque. Once you have a much more transparent financial system, there's things that you can do with it that previously you couldn't do that you can use for compliance requirements. So if we look at like a paper that was recently unveiled on Twitter by Amin Soleimani and Vitalik, and the idea of privacy pools So mechanisms that allow you not only to preserve financial privacy, but at the same time say that I am not like this pool of funds and disassociate yourself with that without necessarily leaving your entire financial trail behind are things that we can use to make new arguments to fulfill the same regulatory desires that underpin these original arguments.
So did you guys hear all of that? That's interesting. So we all come from traditional backgrounds. We've done, enterprise grade data centers, etc. You understand the rigors of institutional specifications. We go out, we explore crypto, it sort of ossifies and it matures, and then we use this as a launching point to say, well, hey, we're actually coming back to kind of our institutional roots, but we have innovated and we've shown you, new novel technologies that actually solve for the same comforts and rigors, but in a new, hopefully more efficient and transparent way. So, crypto is the future, if you guys weren't, concerned about that already. Pivoting a little bit, we are in Asia, we're here in Singapore, lovely Singapore, and, I will say that Galaxy is global, we have a Hong Kong office, we have London, and I'm based in New York. So I really see things through the US lens. We don't really have to talk about the US necessarily, but it is important context versus the Asia market and what's happening here. So maybe pivoting a little bit to just the state of affairs in the market. This is pretty open-ended, but what kind of traction are you seeing here versus elsewhere? I'm assuming that's informed in some substantial part by regulation, what's happening here. So if you guys could just spend a little bit of time discussing what you're seeing and really contextualizing what's happening in Asia versus the rest of the world.
Yeah, I'll go first. So I'm Australian. I've been in Singapore over 12 years now. I think what we're seeing happen in the markets in APAC is really, really interesting. And it's great. I've got a few US colleagues over at the moment, and they're just like, "Wow, your market is awesome." Like, yeah, that's right. So,
It is awesome.
But it largely breaks into two pieces, and so like being Australian, I can kind of be a little bit negative on Australia. That's okay. Australia's kind of has a lot of smart people very into crypto, but culturally, it's very close to the US. So there's this feeling of, look, we kind of know what we need to do, but let's just wait a bit and let's just, we're very close to the US, let's just see, we'll just go a bit slow. But when you talk to individuals there, it's like kind of we know what we need to do. We just seem to be a little bit stuck at the moment. I think India is a little bit similar as well, kind of in that regard from a regulatory environment as well and perspective. There's some, India's got amazing technical talent and engineering talent. And, you talk to them and they're very excited on the tech, but when you talk about, more on the finance side of crypto, then they'll start to kind of push back a little bit. So I kind of view both of those markets as, hey, when the US kind of turns a corner, I'll have two markets to start ripping. So I'll put them in the bag for later, right? And then if you look at, Singapore's just fantastic in regulating innovation but putting a bit of guardrails around for people as well. So I really like how Singapore approaches technology and innovation. It consistently does like this sort of framework as well. Won't let people completely just go wild, right? Needs to do a bit of nannying, but wants to keep innovation. And then that kind of rivalry, Singapore-Hong Kong, is a really good thing. I always want that going on, because it makes both countries better as well. And you've seen Hong Kong come out swinging recently, very aggressively, which is awesome. And then Japan, Japan's been doing its own thing for such a long time and introduced some really interesting regulation, like percentage of assets in cold storage, and people are like, what are these guys doing? But now I think, wow, people are like, hey, Japan, fantastic, you got it right. And Korea's just been consistent as well. So if I sum it up, from an institutional perspective, Hong Kong, Japan, Korea, Singapore are really moving, right? They think globally, they're keeping an eye on EMEA and US, but they're also doing what's right for them. And then, we've got India and Australia sort of just still on the sidelines a bit. So I think if you think about running a business for institutions, you've got part of your business running and you've got part of your business kind of walking, but in the right direction. So it's just an amazing time to be in APAC. Yeah.
I would also say I think it depends on who you're speaking to on the institutional side. So for us, we're B2B2B. and or we're B2B, but some of our clients are B2B2B, right? So on the custody side, but then on the exchange side, we're B2B, but they're often facing off with their retail clients. So also when we look at institutional adoption of staking, we have to consider who the institution is representing, whether it's the retail investor or the end institutional investor as well. So as we've seen, Asia, we can't blanket consider Asia as one. There's each individual country is doing something different, and in certain cases, there's the retail investor is not allowed to stake. In others, they can. In certain countries, the taxes are so high that no one's going to. So I think when we consider adoption, we have to consider who's doing it and where the end money is coming from as well. So we really approach it from a ledger standpoint. On a case-by-case basis, but I think, for our clients, they're slow to move because they're cautious of the regulation and making sure that when they do make a decision, it's going to be the right one and they don't get something happen to them like, in the US with a certain big exchange earlier this year.
I have no idea what you're talking about. And then Izzy, for you, this is about product, but it's also about, you were saying before, you're a contributor to a DAO, and I know it's something that you contemplate in building a more robust infrastructure layer for Lido specifically, and by extension the Ethereum, given the materiality of Lido's contribution to Ethereum. But how do you think about the global distribution of everything from infrastructure to contributors, et cetera, and how we're viewing, co-locating to the activity in Asia versus elsewhere in the world?
Yeah, that's a really, really great question. So this idea that you're talking about, like co-locating activity or distributing activity throughout the world, is actually one of the core values of what Lido DAO contributors try to do with regards to building a robust validator set. So a robust validator set does not only mean something that's performant or profitable, it means something that can withstand like pressures, attacks, and even like something really, really bad happening on one side of the world, that doesn't necessarily spill over the rest. And the way that you do that is by diversifying. You diversify from a jurisdictional perspective, you diversify from a geographical perspective, and you diversify from an infrastructural perspective. So, for example, not only using servers on the public cloud, but running bare metal machines in data centers in certain countries, and making sure that not everybody's running out of the same data center because it has the cheapest power or something like that. So what a DAO has to contend with is how does it operationalize the idea of trying to target this multifaceted approach for what makes a good validator set and turning that into actions and activity. So like I mentioned earlier, the DAO is currently in the process of doing it's actually the 6th onboarding round, because in computers we start with 0 for Lido on Ethereum, where a net 9 new node operators are being added. 2 of them have already started because they were part of the fast track process. So out of these 9 operators, the majority is actually from APAC. One of them is from Latin America, one of them is from Africa, and only 1 node operator from North America and 2 node operators from Europe were included in this round. And that's due to the explicit goal that was set by the evaluation committee and that the DAO implicitly agreed with by basically not objecting to it, to make sure that geographical diversity and diversity is one of the drivers for Lido going forward. And this will also be reflected in other things, like when new modules are being built for Lido, and modules are basically things that avail a pool of node operators or validators to the protocol to use. They will also target other things like permissionless node operations. So perhaps it's difficult to run like a full-fledged staking operation in certain jurisdictions in Asia because it might entail being a VASP or something like that. But doing it from home might not entail the same thing, because there are considerations in tax laws and in regulatory laws that basically say that if you do something as a hobbyist, it's definitely not the same thing as doing something as a professional. And if those allowances exist, then these people, these actors should definitely be enfranchised to participate in staking like the finance of the future.
Amen, well said.
10 minutes Q&A.
10 minutes Q&A, excellent. So we have Q&A, thank you all, that was great. If I could actually just start with one, because I love ending things on a positive note. What do you think is, just point to one thing, something that you're excited about, or one major unlock. It could be for Asia, it could be for your enterprises, it could be for staking in general, but there's a lot of innovation happening, obviously, and is there one thing that you're pointing to that says, wow, like this will bring a lot of net new entrants into this market?
Maybe I'll start from like a technological perspective. So it's something that I briefly mentioned earlier, but this idea of distributed validator technology, whereby multiple people can participate in running a validator together. This means that you can run a validator with your friends, or perhaps with other organizations spread across the world. But what it does is it meaningfully reduces barriers to entry. A lot of times when you run permissionless nodes, for example, on Ethereum, you need to put up some sort of bond or collateral. It's like a security guarantee. These essentially price out a lot of people in the world due to the price disparity, right? So being able to co-run a validator means that you drastically reduce the risk of something going wrong because it requires a majority of people doing something wrong, for example, being offline, which drastically also reduces the cost then to participate, because since the estimated cost of something going wrong over 4 years meaningfully goes down, the security guarantee that people would need to put forth to participate will also go down. So we will see more node operators spread all over the world. And I think this participation in terms of like the underlying network and feeling like you're a part of the greater whole will give rise to kind of like a groundswell of retail participation in blockchain that we haven't necessarily seen in certain regions of the world.
Great.
Well, I'd say that I think in this industry we see, and particularly at conferences like this, we see so many different pieces of technology arising and new companies starting, and we all sit here from, all four of us, in fact, from different pieces of the chain and in the crypto investment cycle. And I think for us at Ledger, we rely on, and I think the next wave of institutional adoption is really going to be relying on the partners that we have. So our new partnership with Blockdaemon, I see some other staking providers out there that we have partnerships with. I'm looking at Kiln here, Figment, even Lido on the native integration that we've done on their DApp on the Ledger Enterprise side. I think the better together narrative is very important because we focus on security at scale, and we work with companies that are dedicated to running the best in class for institutional staking. And so it's important to focus on, allow our clients to focus on their core business, which is, whatever it might be if you're an exchange or custodian, and then to leave, the security and custody to us, and the staking and the, running of nodes to our preferred partners. And I think it's important that we collectively in this ecosystem can work together to ensure that we can all focus on our core business. So for us at Ledger, it's really just unlocking and leveraging those existing partnerships that we have, and going to market with our preferred partners to drive that adoption at scale.
I'll give a technology answer. As we discussed, Blockdaemon's at the bottom of the stack. So, I come from a infrastructure background where we've always had super powerful APIs. So being able to move and offer to Ledger and Lido an API, and they can just come along and order 500 validators, 1 gas fee, and there's a lot of sophistication in that specific smart contract to make that happen. It just starts to make things easier for institutions, right? They're not hopping in a wallet, delegating 32 ETH, paying a couple of $100 for gas fee, just cleaning all those operational processes up with technology is really going to help take the institutions forward. Yeah.
Okay. Looking to the audience. Any questions out there? There we go.
Thanks for that. Very helpful in terms of getting institutional staking. One thing I understand, from Lido's perspective, especially, you've had a very good retail product, right? And that's why you managed to get a lot of adoption with regards to the stakers on Ethereum as a whole. So I think once with the institutions coming in as well, what are your views with regards to governance capture when we talk about layer 1 governance, Lido governance, especially when institutions come in, there'll be a lot more capital and voting power with regards to them holding the stake ETH. Yeah.
That's a great question. So ultimately, the extent to which a staking token has control over a network depends on the network rules itself, right? So Ethereum does not have on-chain governance like a lot of other chains do, especially on the Cosmos side, which is actually a very, very widespread series of chains, especially in Asia. What this means is that Ethereum has soft consensus or soft governance. Basically, people need to collectively agree that this is what the next upgrade is going to look like, and then roll out that upgrade to the extent that there's enough people running it that eventually it changes, what is the truth on the network. So just owning ETH, for example, does not necessarily give you the ability to change what code that validator would be running. And in Lido specifically, if you look at it as a coordination layer of staked ETH, there's no direct way for something that happens on the execution layer, which is where Lido lives, to direct what happens on the consensus layer, which is where the validators live. So somebody who has staked ETH cannot use that to directly, like issue a command, let's say, influence what a validator is doing, i.e. run this program, or don't acknowledge that transaction, or filter that transaction, or something like that. What they can do, of course, is express like indirect preference or indirect pressure. And there's a couple of ways to do that. So one way is potentially through the DAO itself. So Lido DAO is governed by the LDO token. If somebody gets enough LDO, they could do things, for example, like make the fees from 10% to 99%, right? That's why DAO contributors are working on something called dual governance. This is essentially a mechanism that will allow stakers, STETH holders, veto power over certain types of governance votes in the future. So if there might be like a compromised or malicious DAO vote, stakers themselves could essentially pause the vote, either to give themselves long enough time to exit their position and therefore not be negatively affected by it, or pause it indefinitely, essentially creating like a stalemate situation that you then need to figure out in terms of what is the time preference of money of somebody holding on to LDO for so long when they can't get something out of it. And then there's other solutions that are very technical, right? Like at some point you can make the contract non-upgradable, which means that the DAO won't be able to change certain things about them. But we're really dependent on Ethereum not making any more changes to the core protocol before Lido itself can become non-upgradable.
Yeah, thanks.
The distributed validator was really interesting. Like, how do you see retail users entering that, right? Because right now it's still quite a technical barrier to entry to run validators. So how do you, like the regular person wants to find 10, 50 people to run a validator?
That's a really interesting question. So one of the biggest problems, obviously, like around running a validator is how difficult it is technically, even on Ethereum, especially because there's like 3 components, whereas usually there's one. One of the things that some flavors, let's say, of distributed validator technology, the 2 largest ones right now are SSV network and Oval network, is that they try to make it a little bit easier for the user, so they abstract some of the concepts into like a Web 2 flow. And some of them do it more successewise than others, but I think this is where you will see liquid staking protocols actually bridge this gap. So Lido for sure, other staking protocols like Stakewise, Rocket Pool, and all of those different things will find ways to integrate these technologies to make it easier for the average user to become a staker. So they will take the technical difficulties, bridge them either through custom tooling, or by creating an abstraction layer that lives on the app layer that basically fudges this risk. Well, not fudges the risk, but like ameliorates the risk by socializing it. The difficulty there is the coordination aspect. So how do you find like another 10 people to run a node with if you don't know them already beforehand? And so I kind of think of this as like the World of Warcraft problem, right? When you want to play like a dungeon, but you can't find enough friends to go play it. And
you go to the conference over there and find 10 people and you'll be good.
Exactly. So there's different ways to do it. You kind of rely on social mechanisms, but I think we're going to start seeing this idea of node operator reputation and scoring systems play a lot more role in the future. So part of it may be decentralized identity based. So maybe you'll like provide some information about yourself, not necessarily KYC, but some sort of identifying information, or at least enough of it to create an identity. And then you will build it over time by doing things like performing, being active in a community, creating and sharing code. And so the same way that you kind of see like people have like GitHub reputations, as good coders or as designers on online marketplaces, you will see the same thing for operators, and then these communities will self-form around finding ways to create clusters. And then the third way, and this is something that we're researching, is an automated way to do this. So if you can create scoring systems for all of the different people participating on the network, maybe there's an algorithm that you can run behind the scenes that ingests all of this data and then figures out how to allocate stake across these different clusters of groups.
Does it change the economics as well between like the parent-child mechanism? Like somebody has 50 friends and somebody has 2 friends and they're contributing more. Do you think that does anything in the network, or?
So it can, and the other kind of risk here with distributed validator technologies. You say that you take the risk of one person, you split it across 5, but you don't know that it's actually 5. It might be one person pretending to be 4 and 1. And so this is called like a Sybil attack. And what this essentially is it really disadvantages the one person that gets unlucky enough to end up in a group where the other 4 people are actually somebody else taking advantage of them. These mechanisms require other ways of looking at these problems. There's a lot of research being done, and so I think until you figure out how to fight things like Sybil attacks and the white label problem, also where I say that I'm running a node, but really somebody else is running it in the back, then these technologies will not reach a full scaling point yet. So I think it'll be a couple of years until we see really, really mass adoption. In terms of the power dynamics, I don't think it's that bad. I see the point, but I think it's so limited in scope if you think about the total amount of capital that we're talking about that might go into this, that it won't make a big difference. We're talking a few percentage points in the overall stake share of Ethereum.
All right, well, this is the only panel you'll see this week where you have SOC 2 and social scoring, in the same 45 minutes. So thank you so much, everyone, for your participation, and thank you again, Sam, for having us.